James Brown from Barwon Investment Partners. Welcome to the Alternative Symposium.
Thanks for having me, Drew.
Can you explain the basic premise of the listed private equity strategy?
Yeah, Barwon's global listed private equity strategy, the basic premise is to provide investors with private equity returns and that return premium from private equity assets, but with liquidity.
And what are some of the key benefits when adding this sort of strategy to a portfolio?
Well, the key benefit, as I touched on, is liquidity. As we know, access to private equity can be difficult for smaller investors, typically needing larger scale and bigger tickets and longer lockups. Through our strategy, through investing in listed securities, we're able to provide access to that return stream, but with daily pricing and daily dealing and access in small size.
And what does that universe of underlying securities look like?
Good question. So we invest across what we see as the entire private equity ecosystem. So to start with, we invest in buyouts, so your traditional private equity buyouts. These are vehicles which listed vehicles, but we hold a portfolio of private equity assets which they're looking to improve and then ultimately sell for a gain. Alongside that, we invest in listed companies which are backed by a private equity sponsor, where the private equity sponsor has control of the business, and we're effectively able to co-invest alongside them on very fee-efficient terms. Clearly, alignment of interest is important in these cases. We can also invest in further up the capital structure in listed private debt vehicles, so vehicles making the loans to private equity-backed businesses. And finally, we also invest in the listed alternative asset managers, those fund managers, the likes of Blackstone, KKR, Intermediate Capital Group, which are managing private equity assets and generating the fee income from managing those assets.
And what are the other pain points that you're trying to solve for advisors when allocating to private equity?
Yeah, I mean, there's a couple of challenges for advisors in terms of allocating to private equity. Clearly, access can be a challenge. You're often needing large ticket sizes to get access to the best assets. Liquidity, again, typically assets are locked up for a long period of time. And then there's the challenge of vintage diversification. It's difficult to get a diversified portfolio in a traditional unlisted private equity strategy.
And where do you see this strategy sitting within a traditional portfolio?
We see most clients using this as a growth alternative because ultimately the returns we're seeking from the underlying assets are growth. Among our clients, we see it sitting alongside a traditional private equity portfolio in our larger clients. But for some of our smaller clients and those who require liquidity, managed accounts and the like, it might represent their entire private equity exposure.
And can you expand on one of your highest conviction ideas today?
For sure. I mean, a good example in our portfolio is a company called Oakley Capital Investors. This is a London-listed buyout vehicle. It's a fund managed by a group called Oakley Capital Partners, a highly successful European mid-market private equity manager who have a great record of backing entrepreneur-led businesses, investing in consumer, education and technology businesses, really strong track record, great returns over time. And interestingly, we can buy that on the London Stock Exchange at the moment at a 30% discount to its underlying book value.
James Brown, thank you.
Thanks for your time, Drew.